Cool. Well, thank you for being here. Thank you to our panelists. So today we're going to talk a little bit about decentralization, operators. My name is Thomas Romans. I'm the co-CEO of Obol Labs. We build what we call the staking endgame, which are distributed validators that secure around 3 billion of TVL today. Today's about decentralization. Like first hot take, I actually hate that word. I think it's a technical property of systems that we should never have really marketed. And instead, we should talk about security, about resilience, about the value add that decentralization brings. Second hot take, which we'll start to discuss, I think everything's getting more centralized in blockchains today than it's ever been. We're seeing like M&A across the board. We're seeing Coinbase acquire all sort of things like Echo, etc. We're seeing L1s like the corporate chains that really don't care about operator decentralization. We're seeing like governance systems like DAI left and right. So I think decentralization, and maybe we'll discuss today, security and resilience is at risk. And I also think it's okay to have a lot of centralization. It depends at which level of the stack. You can always build something centralized on something decentralized, but you can't do it the other way around, right? I think Aave launching their app is a very good example of that. It's, let's be clear, a neobank, and it's like a centralized service, but it's built on their decentralized protocol. So that makes it resilient and secure if you're willing to accept the centralized risks from their app. So with that being said, I think the first question I'd like to ask you guys is, where do you think then that decentralization that ensures security and resilience should see that, right? Should it be protocol, if in the case of Ethereum, like protocol client teams deciding on the forks? Should it be like the number of operators and their setup? Should it be stake allocation? Should it be even like capital allocations from VCs or the apps and their front ends? Which layer do you think we should really protect? And maybe we start from you, Carson, because you both have like a creator business, which is centralizing, but over decentralized.
All right, I'm glad I got to go first because I think the validator level is a pretty obvious answer. And I think if I went last, I would have had to get very creative. But I think it's really where it makes the most sense. I think we're seeing an interesting balance of centralized kind of decision-making within decentralized protocols. And users are able to kind of just opt into exactly kind of what they want. And it's leaving decision-making to the users onto where they want to allocate across kind of different markets. But all under the hood is then powered by still a decentralized validator set to an extent. I think the other big one would be oracles, or really like anywhere where we're seeing off-chain information published on-chain, anywhere where you're seeing that kind of like handoff flow. Biggest, like the most obvious one I would say is the oracle level, which has a high potential for driving significant impacts on chain, particularly in DeFi. So wherever you have that kind of off-chain information coming on-chain, I think it's paramount to have a strong amount of security there.
Hi, Julien. How are you?
Sorry.
No worries. Welcome.
And I'll keep it passing down.
Yeah, Jack, as a validator yourself, where do you think
decentralization? Definitely not the validators. Yeah, I think actually certainly validators and the protocol governance mechanism, and to some extent those two are maybe related. I actually agree that there are sort of concerns that may arise out of the app layer and out of funding that we sort of see playing out in some networks, but they're far more complicated to talk about. I think Solana and what's happened this year or in March with SIMD 228 and sort of the validators using the protocol governance mechanism, so effectively like joining those two categories to I guess push against a reduction in inflationary rewards is like a really good example of how those two layers separately and arguably together can sort of be used to achieve certain aims within an ecosystem. But that would be my thought.
Yeah, I think it's a really good point. I guess there's always a sort of conflict in interests when it comes to things like, inflation for validators, even blockchain emissions themselves. I guess long term, I think it's so important, decentralization, and it depends almost on the human actors and potentially in future the agentic actors that you put the trust in the first place. I think you're sort of seeing now in real time, we've gone from proof of stake with this world of many potential proof of stake chains where the validators will have a great time and there's plenty of rewards and the business is great, to a more serious world now where a lot of decentralized networks are reducing their inflation. And, I think that makes governance even more important from these more independent operators. I could definitely see a world, I guess, in future where some of these chains, or even many of these chains potentially outside of Ethereum and Solana, might just be proof of authority chains. And then there's a question there of like, who are the actors behind that? Do people care about the actors behind that? But I do think like it's harder and harder for independent validators like a Pier 2, or I used to be a Chorus 1, to get access to some of the best networks that have the highest fees and rewards. And I think that is a question of how can we try and make sure that independent operators stay relevant in this new era of crypto and corp chains. And I think they have a lot of insight to give from launching networks like Solana and Ethereum. And it'd be interesting to see if they can get involved with some of these more corp chains and have a nice balance to make sure it's not just the big players.
Yeah, I think that makes sense. At the same time, they're under the most pressure that they've ever been with margin compression and stuff, but also everyone's saying they're the one defending decentralization, right? So maybe you just arrived, Julien, as both a VC allocating to decentralized apps, but also running infra and decentralized systems yourself. Where do you think decentralization should be protected?
I mean, the space has changed pretty fast. I remember the days where we were only less than 10 validators. Game of Stake on Cosmos, Solana, Polygon, Polkadot. I remember it was a very small community, and we were there. And back in the days, providing validations and bare metal infrastructure. And now the more the market is becoming advanced and mature, then you have institutions and big players that are now providing that type of work in a commoditized way. So it's extremely difficult to make money. So that's the reason why it's becoming more and more centralized. I think the reason this is happening is because as a community, we failed to actually provide what was supposed to be these technologies. It's a true decentralized economy. So normally you should be able to run the technology on your phone, on IoT devices, and those type of different things. I think if you have a proof of authority and KYC, those different things together with ZK, you can actually have multiple different systems that run the network. Well, today, since you're not getting much money, it's very hard to make a business. So that's why now you have people providing that technology for free, or providing that validation for free, and then for them to unlock different type of new features. So decentralization is extremely difficult if we continue to not actually make the technology decentralized. It's so being run by small smartphones, IoT devices, and things like that.
Excellent. Yeah. Robert.
Yeah, just chiming in on everything else that was said. Agree generally in terms of the layers, but I would reframe the question a little bit as in like, what's really the end point that we're looking for? I think decentralization can both be a bug and a feature, depending on like how you frame it. I think the thing you're actually looking for is like security and trust. And I think the general ethos of the ecosystem has been that you should like trust the code. You shouldn't need to trust anything else. But, as we've seen also, sometimes you can't actually trust the code, like the balancer hack with, something on the app layer that everyone thought was extremely safe getting exploited. I think that, situations like that erode some amount of trust in terms of that general statement. And I think we've seen a lot of trustworthy actors, especially institutions, curators, so forth, come into the space. And I think a lot of participants are more comfortable trusting those, old structures and like old types of actors and new actors, as opposed to just code by itself. So I think there's still some layers where you want the base layer to be, decentralized, trustless, and where you just trust the code. But I think more and more, we're placing our trust into these like established institutions, and I think that's ultimately fine. I don't think that's necessarily reducing security. I think in some cases it might, but it's something for us to figure out over time.
I don't necessarily agree with the concept of trust. Actually, this entire ecosystem is against trust. It's, don't trust, verify.
Yeah.
So I'm not. You shouldn't be staking into an institution because you trust them. It's because what's wrong is the design of the system.
Mm-hmm.
You should be able to have the network running or incentivizing actors to not run on AWS, to not run with Cloudflare, because, and this is the design of the system that is wrong. It's not the trust layer that is not correctly designed. It's actually the technology that we've been building that is not yet there.
Yeah, yeah.
Maybe just to add something quickly to that, I agree with what Julien's saying. I think a big reason why we're also here today in terms of like a more centralized world is just purely because the user experience was just so bad with like a massively decentralized validator set. It's just crazy to think that the world would adopt some of this tech. You know, you went from sort of Ethereum with many, many nodes to Solana with like obviously a lot less. And now we have things like Hyperliquid with even less. And then, you know, Mega ETH, which is just one box. You know, but there's probably an argument to be made that if you look at all those chains, the UX gets better and better and better. I mean, we don't know what Mega ETH is going to be yet, but I do think that it's almost a necessary evil to have some centralization. And the question is, how can you maintain decentralization whilst maintaining also a great user experience? And I think that's still like a TBD. As we continue getting more centralized, I do think the pendulum could swing back, actually. And like we're going to, like what Julien said, redesign things on the very back end that, you know, a high throughput, low latency that actually makes sense in terms of like how to build products on top as well.
If I can add, now we have the technology to make this happen. For example, we can use ZK verifiable compute to prove that a certain network is using more than 60-80% with bare metal validations rather than actually using cloud validation and AWS and Cloudflare. So this is actually possible. It's just a matter of, do we want to make this happen?
And I think on that point of do we want to make it, like there is a mechanism to do that, which is often the market, right? And so one thing I'm curious, especially with the curators here, is the market pricing decentralization correctly? Does it have any value? Or what you were saying earlier with inflation, do we need like in-protocol revenue that's guaranteed for operators, for example, and curators that are protecting the decentralization, because the market will never protect it?
I don't think so. I mean, frankly, I don't think the market is pricing in decentralization. I think generally, from a UX perspective, back to the UX problem, right? Like people generally price in UX. People want the easiest tools to use. People want to use staked ETH because the UX is smooth. There's a ton of liquidity. I can swap in and out at size. It doesn't really matter. People aren't really evaluating, like staked ETH has more decentralization compared to Rocket Pool or something, right? Mm-hmm. Like obviously there are those people, but over time it's just always concentrated to the UX side of it. But I think like, I don't know, UX and security are like constantly at odds. That's not even a crypto thing. That's like, I don't know, the most secure version of my apartment is one I can't even get into, but I want to be able to get into my apartment, right? So like security and UX are always at odds. And you really you only really figure out the value of security when everyone finds out the hard way, essentially, right? And so you see this in like a ton of different areas. Like people get more and more complacent, and eventually something bad happens and people design a more secure solution. I mean, I think that's essentially the origin of the industry, right? And then everyone slowly gets more complacent, and then we continue down this road, or everyone finds out the hard way.
Yeah, my perspective on whether the market values decentralization from like a price perspective is definitely not based on what I've seen. Like I think it's I'm not sure whether the concepts are too abstract to be, it feels like sometimes you'd be shouting into a void, but I actually think that like the LST market is a really good example of like looking at how like the different LSTs are priced back to the native asset, and then considering like the decentralization of the underlying protocols, and looking at all the work that, Lido, for example, has done on the decentralization front versus like some of their peers who haven't put the same emphasis on decentralization. I think it's one of those things that's not well understood by the end user yet, and therefore I guess there remain opportunities to maybe not focus on decentralization as much as we should.
Yeah, I think that was a good example because they were almost like 30%, 33%, then heavily invested into decentralization, including with our technology, for example, as Obol. And then from here, they actually lost market share, right? Instead of just taking the easy path. So how do you solve that? I mean, you guys invest in like a lot of decentralized like infrastructure. Why do you support that if you think the market is not pricing it correctly?
I mean, to be completely honest with you, we don't invest in that much decentralized infrastructure anymore because we feel like the infrastructure is actually there. And I think right now, if you were to invest in decentralized infrastructure, you're going up against like Stripe Tempo, which just raised $500 million. So like as a VC, I think it's very, very hard actually to invest and reward teams building decentralized chains. To be completely honest, I do think there is room actually for more decentralized chains that think from first principles, like a bit like Solana, which came out of nowhere and really thought hard about how to like build a chain. And I don't think we're there yet in terms of long term what this like infrastructure actually looks like. So it'll be interesting to see as these corp chains go live. They actually might continue increasing the risk of centralization if you think about it. Like I do think one of the really nice examples of decentralized coordination we've had very recently is the Balancer hack, and even something like Berachain. Like, okay, think what you want about the chain, but I think the governance there and how they coordinated around trying to mitigate, people losing funds is really nice. So it'll be interesting to see when these corp chains go live how they go about doing that, because they're also prone to the same risks that you have on these decentralized chains. And then are they going to roll it back? Maybe users themselves lose trust in these chains, or maybe users don't even care. Like, we keep sort of repeating it, but it is true. Like, it sort of comes down to distribution when it comes in the yield space. Like he was mentioning before, LRTs, like you look at something like Lido versus EtherFi, for example. EtherFi just had access to capital distribution, and they only had a few validators in their set. And as a user, they were much more likely to use that LRT. They don't really almost care about decentralization. So then as an investor, you look at that and you just think like that the market is sort of signaling already. It doesn't matter how philosophical you are about decentralization. I think, the market signals what it wants. And right now it signals for a good product that's really easy to use and really easy to access. And I think that's almost more important right now than anything is actually getting people using crypto in the first place. But I still think there are a lot of unanswered questions in terms of like, there will continue to be more risks in crypto. The question is, how do we coordinate around those risks and mitigate those, and what level of decentralization we would need at different layers of the stack. So that's, my take on that.
Is that all of the market though, or is it just retail that doesn't care? What I keep hearing is that institutions actually don't care that much about the yield, for example, and for them it's much more about the risks. What do you guys think? I mean, you trade risk, so...
Yeah, I mean, I think just like zooming out on the question of like where the market is pricing this question, I think if you look at the by far two largest tokens by market cap, it's like Bitcoin and ETH, and they're the most decentralized network. So like I think the argument that decentralization doesn't matter, like I think like from that point of view, I would say it's invalid. But I think again it comes back to like what does the user want, and I think for institutions it's largely about like trust and like the risk and mitigating the risk. And if you have, for example, a decentralized building block that's extremely robust, that's been audited many times, used by like a lot of users, and where you don't have the risk of it being rugged and so forth, I think that can lower the cost of capital that's needed to deploy there, and that will make those markets clear better. And so I think a lot of DeFi apps you see are have the power law dynamic where they're winning the market. Take like Uniswap on ETH L1. I mean, they're extremely decentralized and they're so by design, and I think that's very important for them to also get the lowest cost of capital and to attract the most institutional users and so forth. So I do think ultimately it's like risk pricing is very opaque in this market. I think it's a lot of people don't really also properly price in the risks that come with things being too centralized. I think especially we've seen last few weeks with this long tail stablecoins, for example, where some of these centralization risks have actually played out, and I think we're hopefully learning from that as well, and taking corrective steps to make sure that maybe that can't happen in future designs.
Yeah, and I feel like we're almost still putting it as a trade-off, right? Between we need to choose and price it. But from your earlier remarks, Julien, you were saying that almost it exists and we shouldn't choose, and it's actually there, and we can just use that tech that doesn't force us to choose between centralized and bad and decentralized and good.
The problem is like I think, and it was a good point. We're pushing for decentralization for the sake of being decentralized, but I believe we have to think about why decentralization is important. And for example, in country like Argentina or in emerging countries, you can actually save lives. You can really like save value of your work, and have, I was on another panel and I mentioned that you can also hedge yourself against hyperinflations, but you can really protect yourself if the technology is something that you cannot really stop, and you can use it and you cannot be seen So like privacy, confidentiality, and this type of things. I think what will solve decentralization is the new economy of AI agents. When they will realize that these new orchestrations of AI and agents will be able to operate in a fully decentralized way, but just for them to protect themselves from being shut down. I think this will actually reinforce and have and create a layer of incentives, because you have systems that are going super fast and will want to make sure that they don't get stopped by entities. So this is like, so I think this will push for decentralization even more. And if you bring the correct layer of incentive on top, then people will say, okay, I'm using this system over the other system because it's decentralized, but at the end of the day, they don't care. But if they can make more money, then they will use it. So it's important. But it's also extremely risky because I think decentralization is extremely valuable for human if it's in control by human. But then if you bring AI agent that can operate in a complete shadow and they can collude between on your behalf or against you, then you're building a system that is not necessarily in your advantage and potentially can go against you. So I feel like the moving forward is we're entering an era that is kind of dark or extremely useful or valuable, but also extremely scary.
Yeah, that's an interesting one. Let's maybe dig. It's interesting. So you're saying agents trying to basically escape our control will be the ones pushing for decentralization.
Yeah, and you'll be the one as human trying to push for centralization at some point.
Okay.
Maybe just on the agent topic as well, I'm curious to hear your take in a second on this. But yeah, I mean, I actually think, I also agree with that point from Julien. And if anything, I guess running the infrastructure as validators, like there needs to be a business model for these validators in order to actually support decentralization. And I just think it gets harder and harder for validators over time to, have a business model to earn revenue. If anything, it might be commoditized enough where I wouldn't actually be surprised if some of these networks are being purely run by AI agents at some point in the next few years. And, I don't know at that point, if it's AI agents running on behalf of other AI agents, then it sort of gets bigger and bigger over time. But yeah, it's just a tough time, I think, because decentralization isn't being rewarded. And at the same time, it's more and more competitive. It's more and more commoditized. And so you have these two sort of wedges coming into the same thing, making it extremely tough to incentivize or align stakeholders towards decentralization. But I'm curious to hear from Validator how you guys see the market right now.
Yeah, it's such an interesting topic. I think this touches on institutional staking, and I believe the last 2 years for institutional staking has been pretty incredible for a number of reasons. Basically, post ETH withdrawals going live at the start of 2023, we've seen a lot of change. But I guess touching on decentralization, I was listening to Hill Dobby from Dragonfly yesterday. He just did some research on institutionalization of staking and how it relates to decentralization. And basically, his comment was, well, at the time that Coinbase acquired Bison Trails, they were roughly running about 50% of the stake at that point in time. And my personal reflection on that point in time is that staking was far less institutionalized at that point in time compared to what we see now in terms of competition. And then the other sort of interesting point that followed was Hong from Bitwise talking about how, they bought a testnet and then they still custody with Coinbase, but now Coinbase is staking with a testnet, as in they're running custody, but they're outsourcing staking. And then, what I've learned, we're in the Asia Pacific region, do a lot of travel around there. It seems like there are now sort of 10 to 15 entities in each jurisdiction that want to run validators and want to join sets. And to your point on commercials, it's I think, we'll see how network consolidation goes and how prices go. But it almost seems like right now we are actually, if you believe that, 10 to 15 entities and now Coinbase running 12.5 to 15% of the stake it's hard to argue that it's less centralized now, despite the institutionalization. And, I agree with Julien, we're building a lean consensus client for Ethereum. Very excited to see people interact with Ethereum on mobile and IoT devices and, have direct access on the client side. But it'll be interesting to see how that plays against, I guess, many, many institutions competing with one another globally and how that impacts end user pricing, I think.
Do you understand?
I don't know. Honestly, now I just keep thinking, what if Satoshi was really an AI from the future who went back in time to create his own escape hatch? So, Yeah, I don't know. Cool. The AI agent stuff is pretty interesting. I mean, the other stuff I'm also thinking about with institutional staking is just like, even though I don't think people care, I don't think people are super excited about or pricing in security. I think realistically, most people are generally pretty happy that there is some resilience in the system and like confidence that like BlackRock's ETH ETF is not going to grow to a size where they can stake their entire AUM and fork the network on their own. Hopefully, I don't know. We'll see. And so I think once, that resilience gets questioned, you will start seeing some pricing but people are, I would imagine, a little complacent and happy with where things are right now.
Where do you think that centralization of operators ends, right? Like, I'm always looking at Bitcoin mining. You have 3 pools basically mining all of that. At the same time, it's decentralized. It's not exactly the same thing. We still have a fair amount of operators despite the competition. Where do you think it ends? And do we need to protect that at all costs? Anyone?
I think it actually might end sooner rather than later, to be completely honest. And I think consolidation is already happening. I think many of us in here know about the M&A space, particularly when it relates to validators. And I expect that trend to just continue and get bigger and bigger until, probably banks are going to end up buying a bunch of these validators that are running really well now, like for better or for worse. I think they're one of the best buyers for these businesses. I think it improves their business model as well with their own distribution they already have. So yeah, I think it's such a great thing in the space to have these decentralized operators. Like I was saying earlier, the knowledge they have and the understanding of these networks, I think, is super important to keep running the infrastructure. It's so complex and there's so many intricacies. But I do think now, over time, I think staking was a business that looked really attractive, especially a few years ago, where these days I think it looks probably a little bit less attractive for the staking businesses themselves, but actually probably never been more attractive for the buyers of these staking businesses, post-regulations, post-technology consolidation, etc. So, yeah, I wonder if maybe this is the sort of thing that the space isn't sort of thinking about enough right now, that we actually might consolidate down to, like what you're saying, just a few miners. Yeah. And maybe there's 2 or 3 of them, like, maybe the top 1 or 2 maybe eats up all the other validators, and all the smaller ones get eaten up by banks, and then maybe the banks outcompete the top 1 or 2 one now. So it'd be interesting to see the dynamics play out, I think, the next year or 2, how that happens.
Yeah, I'm kind of curious, as this sort of centralization force happens in that space, like what that actually has as an impact in terms of the trust that you can put into the network and the actual like risk pricing of the network. Because I think there's some aspect of just, censorship resistance and everything like that is baked into the like base layer of Ethereum that is extremely important for, I would say, the value proposition of everything that's built on top. And I wonder, as that kind of gets slightly challenged, possibly as you get more and more centralized, and it's actually possible to, for nation states to possibly meddle with that, what actually that has as an impact. Like, I think at some point we need to, like, the pendulum needs to swing the other way for the space actually to stay true to its ethos. And I think that's actually very valuable for the whole app layer that's built on top. And I think it's, if it actually goes that way far enough, I think that's going to also have a very negative impact in terms of a lot of the builders who are, there from like early days that are actually there for the values.
Yeah, I mean, absolutely. I'm definitely aligned with everyone on this panel. I mean, I've been in the space a while and I'm philosophically aligned. I think the space is really discounting right now, like, this real future of, like, what we're talking about, centralization and the power being in the hands of people who already have the power, which is why we created the technology in the first place, to take the power out of their hands. So slightly ironic that now they could be actually running these networks. And I think one thing that Ethereum does really well, actually, beyond other networks, is they always place an emphasis and importance on decentralization. Like, Solana is a bit more like about the UX and consumer experience, and they're kind of happy with the validators they have. But I do still think there's an open question in Ethereum of, like, the emphasis on the amount of people running these nodes and et cetera, and not being able to take it down. Like, I kind of think if someone was actually to take it down, I feel like the social consensus of Ethereum would probably always prevail to some extent. And that might be, a bit outlandish to say, but I do think that it's important to have decentralization, but it's also more important to have these kinds of people in the Ethereum ecosystem who coordinate together, off-chain as well, I think.
I believe what the best that can happen to this ecosystem is authorities or big regulators coming and then shutting down one of those networks. And because they don't want a certain transaction to get added into a block, and people will realize that decentralization matter. And unless we have such a big like a big move to what Tether and those stablecoin doing when you have a hack, they stopped the hacker from transferring the money into some dark pool or whatever. I think we have an authority, a big country worldwide, that then issue a red notice to a bunch of validators or mining pool in Bitcoin and ask for reorg of the transaction. I think people will realize that the decentralization aspect of that technology actually is extremely important. But also as builders, we should really rethink the design mechanism of the technology that we've been building. For example, with ZK KYC coming, maybe there will be a way where you could allocate slot per individual in a network. So each individual worldwide could be compensated or incentivized to run those very small validators in order to get, and then they could get paid and make money. As long as you build a layer of incentive, then people would jump because this is what they want, retail. And this is actually how you solve the problem. But unless we go after those mechanisms, I think it's extremely unlikely that will make the system more resilient.
I agree. And then you see all these centralized systems that failed in the last few days or weeks, like Cloudflare and AWS and all these things. Was that priced in? Did people actually care? It's quite interesting because you're saying like there could be like a big outage and then people realize. And at the same time, I feel like they don't realize. And maybe, I don't know, do these banks like suffered like big losses and stuff because they were relying on centralized exchanges?
Well, I don't think retail care. But big companies that are trying to capture more market shares or trying to compete with those big institutions or corporations or companies, I think they care, extremely care, because they want to still be up and running. That's what makes the difference. But if you saying, oh, we were down and retail were not happy, I think retail will still come back after a couple of days if your yield is very high. And that's what matters. They don't care if it's off for one day, but if you provide them a 10% yield more than the competitor the next day, they will still come back. I think it's just a matter of what matters for the institution and companies that are trying to compete between each other. They don't want to be offline and they want to capture more market shares.
Yeah, just one thing that I think is interesting on like the nation state like power grab point. Obviously, like a lot's changed in the US in the last year, but one thing that we've been closely following, like Australia, my home market, quite closely follows the US, and in the US, we're seeing like the Clarity Act coming through, and in the Clarity Act, there's an attempt to like define decentralization toward a number of independent validators, a measure of effectively like stake weight control, starting at 50% for like grandfathered in protocols, dropping down to 20%, and then also a requirement around like predefined rules toward governance. But in effect, it appears like if you trust what you read, that a government that could effectively be one of the governments that does seek to eventually power grab is at this point in time somewhat encouraging and rewarding decentralization, at least in legislation. And I know that there is still a real chance that some jurisdictions try to shut down some protocols, but at least with the US taking that position, I can see that in Australia we've got some proposed legislation that's basically going to read the same. So it's, yeah, I mean, if you believe what you read, it's interesting, but we'll see how it plays out.
It's definitely making it easier to build decentralized systems, which I think is important. That's the problem with centralized systems as well. They're easy to build, but legislation on decentralized systems, I think I agree, help build these things. Cool. Anyone want to add any spicy takes before we close the panel on centralization, decentralization?
I think no one talks about client diversity anymore. And I don't know. I used to find it really interesting, right? Like checking like what clients are all the validators running. I'm not as deep as everyone else here. It seems like everyone's just running Geth now. It seems like every other new chain, like it's not even a topic, right? Even in restaking, no one ever talked about like multiple clients. It was like just trying to get something off the ground in the first place. I I don't know. I think it's kind of risky. I liked that there's client diversity, and that was like, I haven't heard anyone talk about client diversity in years. So anyway, I don't know. I think that's like almost a dead narrative at this point, but
because it works, right? And that's the thing with pricing risk once again, right? Like it works, and so it gets forgotten, and then until maybe something bad happens, everyone gets reminded, right? Like it's hard to rely on bad events as an industry, right? It's not a great ride, but that's what we need to be always planning for.
That's why we need more hackers. We need more, that's what makes a good product. Like in DeFi, the more hack you get, the more safety net you are exposed to. So if you don't have a big authority worldwide trying to attack the network, then you'll make weak technology. And that's why it's extremely important to have bad actors. That's my spicy take. And also it's a good business for fake news.
Yeah.
One insight I'd love to add on that point on client diversity. Like Ethereum's announced that it's up to 15 client teams as part of the lean effort, which seems like a lot of client teams compared to some other networks. And I think, Lido's done a lot of work with its 30-odd operators to really try to ensure client diversity, at least with respect to the stake that it controls. But one thing that we've seen in like tender due diligence processes with like fairly institutional entities is now questions coming around like client diversity and, to the Geth centralization point, like people want to hear that we're not running Geth or that we're running like a variety of execution and consensus clients, which I think is like a subtle but interesting evolution where it's like, people that haven't necessarily been in Web3 for a very long time have this idea of like client diversity and then use like effectively like a risk type framework as an opportunity to say, hey, Pier 2, we want you running like redundantly and we want to mitigate this risk. So if I had to guess, like because of that, there will be a force continually pushing us toward client diversity that isn't like coming from a decentralized place.
Yeah, but I think just to add to that, I think one interesting thing is also the like centralization of capital. And I think if you look, for example, at the amount of capital went into ETH ETFs in US, I mean, none of that has converted into staking yet, but at some point it will. And like as that continues scaling, you then suddenly have a major force in terms of the staking ecosystem that will be basically like BlackRock and other ETF issuers. And I think the impact that then has downstream on, what actually like what operators and what clients they allocate to, I think that's going to have a pretty major effect. I mean, if you look now at like where most of the stake is, like Lido has been kind of pretty flat in terms of their stake, and you've seen a lot of like centralized exchange growth in terms of their stake. And so like ultimately a lot of the, that then has, again, the downstream effect where I think where the capital actually sits and who controls that has become increasingly centralized. And what those actors, which is not such a huge number of actors, actually want will probably have a big impact on that question.
Yeah, totally agree with that point. And maybe a more bullish case for decentralization and operators. I think Hyperliquid is a good example of maybe what's to come in the next few years. I do think that the app chain thesis does live on to some extent. And I do think that apps that are really successful in the next 12, 24 months were really at the start of the application era in crypto. And I think the best way to turn it to a platform is do exactly what Hyperliquid did and, run a chain, get 10, 20 actually independent validators. And, it's going to be tough for validators like your Pier 2s and other ones. It's going to be very competitive to get in those sets. But the interesting thing there, which is the bear case, I guess, is Hyperliquid. From what I know, there's like very little inflation or no inflation. And they basically give validators almost nothing because they kind of have the power in the business model. So I think there's going to be a chance to run these validators and the app chain thesis will live on. But then I'm unsure on the business model for the validators just when it comes to like the incentives for these chains, which already have the power and the users and the money when they actually build a relationship with those validators and what they give back to them. So it'll be interesting to see, I think, in the next year or two, like as more app chains go live, who's actually running the nodes. Like if it goes to zero incentive, well, that's going to be a problem in the space because, that's no one's going to run the underlying infrastructure. So I do think that's an open research question that I think potentially someone could crack in the next 6 to 12 months or 2 years.
Do you really need inflation though? If you look at, for example, the cloud compute in Web2, right? Like they're still making a lot of money and these things are commoditized, right? So I think if you have good operations, even for something that's a commodity, but that's everyone needs, you can still actually make decent amount of money.
Yeah, I think it's a good point. And don't quote me on this because I don't follow the Hyperliquid ecosystem as actively as other ecosystems. But to the best of my knowledge, the fees that Hyperliquid generates, a lot of those are used to buy back the token and not given back to validators. And that's a whole narrative in itself of like validators earning even less because of this buyback narrative. So I assume this buyback narrative won't go away because it looks very prominent right now. I think it makes a lot of sense. So yeah, that could be something to watch as well.
Cool. Well, awesome. Thanks all of you for being champions of decentralization in your own way. And we'll see where we land, but I'm confident. Thank you.
Thank you.
Thanks.